Hey there, money mavens! Ever heard about making money from thin air? Sounds crazy, right? Well, not so fast. In the wild world of finance, there's a strategy called the yen carry trade that has enticed investors for decades. It's like a financial magic trick, but instead of pulling a rabbit out of a hat, you're aiming to pull profits from the difference in interest rates between currencies. The yen carry trade is no get-rich-quick scheme, but a calculated strategy with its own set of risks and rewards. So, buckle up as we take a deep dive into the fascinating world of the yen carry trade. Get ready to learn the ins and outs of this intriguing strategy and discover if it's the right move for your investment portfolio. Let's break down the mechanics of the yen carry trade, step by step. Step 1. Borrow yen at low interest rates. Japan, for a long time, has had notoriously low interest rates. This makes the Japanese yen an attractive currency to borrow. Step 2. Convert yen to a higher-yielding currency. Think US dollars, euros, or even emerging market currencies. Step 3. Invest in higher-yielding assets. You take your newly acquired currency with the higher interest rate and invest it in assets like bonds or stocks. The goal is to earn a higher return than the interest you're paying on your yen loan. And voila! That, in a nutshell, is the yen carry trade. Hold your horses, cowboys. Before you jump headfirst into the yen carry trade, let's talk about the risks involved. Exchange rate risk. The currency roller coaster. One of the biggest risks is fluctuations in exchange rates. If the yen strengthens against that currency, your profits could be wiped out faster than you can say sayonara. Interest rate changes. The unpredictable factor. If Japan decides to raise its interest rates, the cost of borrowing yen increases, eating into your profits. Market volatility. The wild card. Sudden economic downturns or geopolitical events can send shockwaves through the market, impacting currency values and your investments. While the yen carry trade can be potentially lucrative, it's crucial to remember that it's not without its share of risks. Carefully assess your risk tolerance and have a solid understanding of the currency markets. Section 4. Historical context. Riding the waves of yen carry trade. The yen carry trade isn't some newfangled investment strategy. It has a rich history dating back decades. The rise of the yen carry trade. The yen carry trade gained immense popularity in the 1990s and 2000s when Japan implemented ultra-low interest rates to stimulate its sluggish economy. Investors, enticed by the prospect of cheap credit, flocked to exploit this opportunity. The global financial crisis and its aftermath. However, the party didn't last forever. The 2008 global financial crisis threw a wrench into the works. As investors panicked and rushed for safe haven assets, the yen, known for its stability, strengthened, causing significant losses for those caught in the carry trade. Despite setbacks, the yen carry trade has shown remarkable resilience, resurfacing whenever the opportunity arose. Section 5. The yen carry trade today. Still relevant or a thing of the past? So where does the yen carry trade stand today? Is it still a viable strategy, or has its time in the sun passed? The Bank of Japan has maintained its ultra-low interest rate policy for years, keeping the yen attractive for borrowing. This, coupled with the allure of higher returns elsewhere, continues to fuel interest in the yen carry trade. The interest rate differential between Japan and other developed economies remains significant, making the strategy potentially profitable. However, it's not all smooth sailing. Geopolitical tensions, global economic uncertainty, and market volatility cast a shadow of doubt over the strategy's long-term viability. The yen carry trade, while still relevant, is not for the faint of heart. Section 6. Conclusion. Weighing the odds. Is yen carry trade for you? The yen carry trade, with its promise of leveraging interest rate differentials for profit, can seem like an alluring strategy. However, as we've explored, it's not a one-way ticket to riches. It's a complex dance between risk and reward, influenced by a multitude of factors, from global economic conditions to central bank policies. Before you even contemplate dipping your toes into the yen carry trade, ask yourself, risk tolerance. Can you stomach the volatility of the currency markets? Market knowledge. Do you have a solid understanding of how interest rates and exchange rates interact? The yen carry trade, like any investment, requires careful consideration, a well-defined strategy, and a healthy dose of caution.